Hello traders, Gary Wagner here, just about 11:25 in Honolulu, 4:25 in New York. It is Monday, January 23rd, 2017, and this is the Daily Report for Gold and Silver. On day one of this new administration of Trump's presidency, we do see some reactions in the market, and we see a little bit of softening in the equities markets and some definite selling in the U.S. dollar, which in fact has caused the precious metals to move up and to continue this multi-week rally. On today's video report, it is rollover day or rollover week, and I will talk to you about our current position and the fact that our Feb gold positions are set to expire, and my recommendation is to roll them into April. We'll talk to you about that as we pull up our first chart, and I talked to you about some of the differentials in terms of the prices between Feb and April, Feb being spot, April being what will become the most current or most active futures contract month. And as I said, we'll talk about that in a second. But first, let's take a look at price changes today. Gold up substantially, up about $11. This one we look at COMEX futures at $12.1620. As I said, net change about $11.30 to the upside, a net gain of almost a full percent, so quite respectable. A low on the day, $12.09, and the high on the day, $12.1940, so we're just about $3 off of the high. Silver also showing a nice gain on the day. Silver closing up over a full percent at $17.21. An 18-cent gain. Low today, $17.67, and the high, $17.28. So traders, I did get a few emails over the weekend expressing concern about the fact that we do have February COMEX contracts coming to settlement or close, and we need to either sell them, get rid of them, or roll them over. Rolling over a contract is simply a process in which, when we're long, we will go in and sell our February positions of long gold, and we will buy April positions of long gold, effectively rolling over and attempting to buy them in essence at the differential between the two prices. Of course, there is an ask-bid spread that will add to that equation, but for conversation's sake and for strategy's sake, let me go and show you this as follows. Currently, we're at $12.1670, up $11.80. This is most active February contract. As you can see, the /F represents a continuous contract, and it is initially working off of the February contract. When we move over to the April contract, instead of it being at 1660, it's at 1950. And so you can see there's in essence a $3 differential between April futures and February futures, 2 months apart. So my suggestion is that all traders that have multiple contracts or even single contracts of gold should go ahead at any time today or tomorrow and sell their February gold, and at the same time buy April gold and effectively roll over those positions. So traders, absolutely no doubt a nice push for the first day of the week, first day of Trump presidency. What that tells me, that along with equity weakness, dollar weakness, and the dollar weakness, of course, is really over 100% the rationale or the reason we're seeing this substantial move in gold. In fact, time permitting, I'll go ahead and pull up a Kitco Gold Index in which you can see the exact percentages and numbers. But we're off to a nice start. Most importantly, on a technical basis, when I look at this market, what I am impressed with is the fact that we had an effective close above that 50% retracement, and that of course is where we have been looking at some sort of resistance in the market. Of course, we had that last week in that we saw highs that went above that, but the close that fell far below that, and we could certainly see by virtue of the low that came in the market, that this area right here, which was 1195, it's right where our stop was, there is some reasonably good support in that area. We can also see from this chart, and this again is a weekly candlestick chart, that when we look at this period of time, the beginning of 2016, say February through about the middle of June, you can see that we definitely had this particular area of around 1212, 1210 being a critical area of support. And the reason that I say critical is that you see, let me go ahead and change my pointer, excuse me, but you see multiple lows that go below that. On a weekly basis, you have had multiple occasions, I should say, 1, 2, 3, 4, 5 occasions in which the market traded to a low below this price point. But in all 5 occasions, we had the body of the candle, meaning the open and closing prices, fall above that line. And so that's what tells me that this is, on a technical basis, a pretty critical area. The reason that it tells me that on a technical basis, simply put, is that each time these lows were reached, there was enough buying that came into the market to not only take it off of these lows, but have it close well off of the lows and close above, as I said, that area of around 12.12. So it is an important area. The fact of the matter is it's only Monday, so we could see anything occur. But at least for now, we've got a solid move that goes above this particular price point. And so therefore, it makes me feel more comfortable in terms of my current target, which comes in at around $12.50 per ounce. So traders, we also have long positions in silver. Those positions we put on below $17 per ounce. Currently, silver is trading at $17.24. That's basis most active COMEX contract, and the most active right now is a March contract. You don't need, for those who are trading silver, do not need to worry about a rollover in silver just yet. When that time occurs, we will definitely bring that up and talk about it. However, in silver, when even on the weekly chart, we're not seeing that the same kind of clean move up, although we are seeing it with these series of lows. You can definitely see this nice uptrend, but when you look at the individual range of each week on the candles, you can see that in some ways they're all over the board. And we can really illustrate this, of course, by blowing this chart up. Let's go ahead and do that. But here's what I mean. The market moves up, and then you get these 3 weeks with very, very small bodies, consolidation. You get these pops to the upside, and then again, red or unchanged candles. Now we are on this week in which we're getting a nice rise above the last 2 weeks highs, but not above this high that came in, which came in at around 1737, call it 1740. So in terms of where I'm looking at particular resistance on silver, there's a couple of points. First of all, I have to draw your attention to these series of tops that are right here. And then if we carry them over, quite obviously, we will see that that is pretty much where the close occurred. It did trade slightly above that price point, but it did close right at or slightly below that price point. So we want to take a look at that. Then the next real level we want to look at is the former high. And as I said, that comes in at around 1737. My advice for now, we're going to be rolling over our positions of gold to become most active April from February. We're going to be maintaining our current long in silver, maintaining our new longs in gold after rolling them over, maintaining all of our stops. Although what I will do is address the stop that is currently in gold, but the differential is only about 3 cents, so it's something we have some time for. I'm not going to rush with that stop. In other markets that we follow, noteworthy has been the Dow Jones Industrial Average, which is closing just at around 19,000. This is settlement, of course. We'll call it 19,800, putting it down about 27 points. Now, it was down much more than it was on the close. It did par some of the gains by the close. Low of the day was 17,732. When we look at the Standard & Poor's, we had a 0.15% drawdown in the Dow Jones Industrial Average. Excuse me, and let me get this chart out of the way. About 0.25% drawdown in the Standard & Poor's 500 at 2265. And most noteworthy was some real selling pressure that occurred in the U.S. dollar. U.S. dollar index closing off about 0.55%, excuse me, at 118. And as we've talked about over the last couple of weeks, my sense is that we will continue to see a lower dollar. We will, on the trending markets modules, cover this dollar in detail because it looks like on a technical basis, it's close to a level of support. And I want to talk about where it's going to go if it breaks below that. So in terms of the other markets that we follow, the Dow Jones Industrial Average is absolutely showing some real signs of being top heavy ever since it's come to within a fraction of a point of 20,000. We have seen this market trade to lower pricing. We've talked about over the last couple of days that really what we're noticing more than anything else is the fact that we can really describe this market as having this kind of a rounded top. And it's that rounded top that we have seen on multiple occasions, which can signal a potential top and then indicate much lower pricing ahead. Or we have seen it where it's just consolidating before popping to higher pricing. However, right now what we have is as follows. We have the fact that this market has genuinely been bid up aggressively since the presidential election was held in November. That represents this week on this weekly chart, taking the Dow up roughly 2,000 points from about 18,000 to about 20,000. Now that he is in office, and the optimism is going to begin to be based upon goals being achieved rather than promises being made, there's a little bit of more caution that's coming into the wind. And so what I think we're seeing is traders basically casting a net of uncertainty. Not that they believe he cannot achieve these goals and create a more vibrant economy or that he'll fall on his face. Rather, it's kind of a wait-and-see attitude as we see how Trump leads, how he tries to implement pledges and promises into policies, and if he is able to accomplish what he says he can do. And so for that reason, we might see weakness before we see strength, because honestly, it will take some time before, even if he is successful, which we all hope and pray that he is, we're not going to see net results. Not in the first couple of weeks. We will get an idea of what he's accomplishing or trying to accomplish. And most importantly, we'll get an idea of where he's going to put his primary focus. And I think we certainly saw that today. And so traders, lastly, I do want to look at the dollar index. Tremendous fall today, down 0.68% as it's currently trading at 100.06. Obviously, that 100 is what I call a century mark. It's a major mark, but it's a psychological level. We've got 100.77 as a level to look at in terms of our fib retracement. That is where we closed at on Friday. That is where we opened today, and we obviously ran straight through that particular price point. My belief is that along with the potential for lower pricing in U.S. equities is the potential for lower pricing in the U.S. dollar. I think we're going to see that drift lower. As we talked about also on Friday, I don't see any major support on a technical basis coming in till roughly 99 on the dollar index. And traders, that is a full percentage point away. So traders, as I said, roll your long gold positions over and maintain your current long positions, maintain your current stops in both gold and silver. Gold, of course, after your rollover. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.